Hello again. I'm Michael Bender from the Center for Fiscal Equity. Welcome to our multi-part discussion on tax reform. Love talking about it. It's my favorite subject, which is why I'm no fun at parties, but I don't go to parties anymore. So I wonder why. This is meant for members of Congress and the Senate, their staffs, the Revenue and Budget Committees, for professionals in tax policy, left or right, because there's something in this plan for both sides, and well as people who are just interested. If you're just interested, or even if you are in the government, government executives too, and analysts, share and subscribe. And if you you can be a Patreon. I don't think the government credit card works that way, but yeah, other people who are not using their public funds, and if individuals want to be Patreon, that's fine. I'll take anybody from anybody from intern to staff director to member on my Patreon, and one of the benefits actually of being on the Patreon is that we will have scheduled Zoom calls only for Patreon members. That's for the highest echelon, which is not a cheap echelon to get into, but you'll see that on the Patreon page again down here. Also links to the plan itself. And this is an attachment to most of my submissions, both written and video. So in video 1, we talked about payroll taxes for OASI and for wage surtaxes, which would fund war and debt, and the Social Security net interest, and debt remove, and the trust fund, as well as everything. There will be something about debt when that is done. We'll have a presentation on how to get it down and why to get it down and who owns it and who owes it. But that's a later video. And then the subtraction VAT is how social programs are funded. At the state level, it funds education and some aspects of workforce development. And at the federal level, it funds childcare, healthcare, and the child tax credit, refundable, so that and there would be no more EITC because there's now I propose a floor for individual payroll taxes. Sorry. So that takes care of social costs. And the ideal is so that employers directly provide the social spending. There's a tax they pay. And they either pay if they owe more than they give out in benefits, or they receive more if the benefits they give out are higher. And what's the way the receipt comes in? It comes either in an additional credit for your invoice VAT, also known as a general sales tax, or as a credit, or as a that's basically it. Or as a deduction from it. So you either have to pay more of the I-VAT or less of the I-VAT. You write one check, but there's a line item on it. So we're to the Invoice Value-Added Tax. Now that I've taken up a third of the video and describing where we've been, let's go where we're going. So invoice VATs, also known as general goods and services taxes, or just the usual VAT, are border adjustable taxes that appear on the purchase invoice. The rate varies according to what is being financed. In other words, if Medicare for All does not contain offsets for healthcare, or for employers to fund healthcare, then Medicare for All would be paid for, or the public option would be paid for with this tax. Also, if savings for Social Security employer contribution aren't deducted from the surtax. The surtax would be lower, and this tax would be higher. And if this tax is higher, then the one tax is lower. So if the invoice VAT is higher, so that you have a border adjustable contribution to the employer portion of Social Security, then the subtraction VAT is lower. Healthcare, if it's being paid for generally, the S-VAT is lower. If employers pay for health costs, then the I-VAT is lower. If they pay for retirement, then there's an amount in somewhere in the around 35-40%, and it adjusts. So what does this pay for? It pays for defense. Defense that's domestically paid. So the Air Force bases, the state Army and military bases, shore operations, procurement operations until they are transferred to the using command. Any command that's where the squadron or wing is domestically based. Foreign basings are paid for by the asset VAT or the asset VAT or the wage surtax. Also non-defense discretionary, all paid for with this tax. If you have regional government, so if you had we have regions now, but if they had more authority and separate budgets, bringing it closer to home, then you'd have to pass a constitutional amendment. But then you could have, decrease decrease or increase your tax, or decrease or increase your spending in that region to basically manage your own fiscal policy. Right now, excise taxes, which is what a value-added tax is, have to be uniform. So you couldn't have like a regional VAT. Right now, you could eventually. It would take a constitutional amendment. Regional government, by the way, doesn't require a constitutional amendment. It can be the organizational powers of Congress can do anything like that. They can, have caucuses, create officers, the office of regional vice president. They could organize the government the way they want and themselves the way they want. But to change tax rates, however, then you would actually have to pass a constitutional amendment. It's just, you'd probably do the other one too. But, and you would do regions primarily for the reason of being able to control spending in your region. Either have higher spending or lower spending, and have more autonomy over regulations, all of that. So some regulations would say federal, like the ones on worker safety and race and sex, but yes, some things would of course be regional. So I've hit, I think, all the major points of this. The amendment, and the most important part. This is where we're talking about the comparisons between this tax and inheritance taxes. Give as much money as you want to your heirs, because they will pay this tax. And it's anywhere between 13%, maybe as low as 10, but 13% is the rate if healthcare is paid for by the subtraction VAT and retirement is paid for by the subtraction VAT. If those things are paid for in the invoice VAT, which means only Americans pay for them, and so there's no export tax factor. So you actually have to do it this way under the Constitution. A subtraction VAT benefits the people who are importing American goods, so because it benefits the employees, it's a cost of labor. But public costs, should not be paid for by income taxes. They should be paid for by a value-added tax. So that, because if you don't, that's an export tax implicitly. That's an export tax implicitly. That was a little boop. Sorry for that. I pounded on the table. So to avoid the constitutional problem, you would put load this as much as you can, and then people who inherit money or who borrow money from their stocks or their capital future gains, you borrow money, it's fine. You spend it, you pay. Between 13 and 20 something. So yeah. And if you live in a lower cost region, you pay less. So depending upon how you get the mix. So you get the idea. While there is a plan with recommended rates, there is no one rate. If you add a carbon added tax, which is a certain kind of invoice tax, because the carbon added tax, as opposed to a carbon tax, should be on the receipt. Energy pricing is inelastic, which means that you keep buying no matter what the price is up to a certain point. There's like a kink in the demand curve. So, you basically buy as much as you need, and then you stop buying. So it's like this and then that, or like this and then that. You buy what you need until it's just too expensive, regardless of the price. That's how people buy gas. The same with taxes, because of the elasticity. Oil companies will eat this. Will eat the tax, but if you put it on the receipt, even if they eat the tax, the information will be there, so you can wisely consume. Now, if you had a carbon added tax, it would also pay for transportation. You wouldn't have another gas tax, but it would also pay for research and development into things like fusion, into cars that both drive themselves and get power from an electrical grid. Like trains do. They've got this wire and it connects. And if a town does that, it's greener and you can breathe better. And the research to do that, and even maybe to implement that, would be paid for by a carbon added tax. And if you have a carbon added tax, then it's not paid for instead by the invoice value-added tax. So, if you have no carbon added tax, then the costs that would be incurred for regulation, research and development, transportation, would instead be paid by gas taxes and the invoice VAT. If the carbon added tax exists, then the invoice VAT goes down. So, there's 3 or 4 taxes that are consumption taxes that are fighting for what they fund. There's no one right answer. So it's a policy choice, and it's up to the committees to decide where they want to balance it, how they want to link spending to revenue, which I recommend, because then you can control both the spending and the revenue more precisely. So that is actually it for the invoice VAT and the carbon added tax. I think I have covered everything. So thank you for your indulgence. We will wrap it up in another video, and we'll probably also talk about winners and losers and why each party has an interest in seeing this done. So I thank you again. There's stuff in the description about being a Patreon, share and subscribe, and there'll be links to the other videos in this series. So again, have a pleasant evening, and see you in the next shot.